Hello everyone, welcome to my channel Additional Source Income. Today we will talk about the stock market for beginners. Make sure to watch until the end as I will go over types of stocks and how to invest in stocks. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss out on our latest videos. If you've ever wondered how the stock market works or how you can start investing, you're in the right place. In this video, we'll break down the basics of the stock market, including key concepts like stocks, dividends, and market trends. We'll also discuss different types of investments and how to create a diversified portfolio. Understanding the stock market is crucial for anyone looking to grow their wealth and secure their financial future. By the end of this video, you'll have a solid foundation to start your investment journey with confidence. So, whether you're looking to save for retirement, a major purchase, or simply want to make your money work for you, stick around as we explore the exciting world of stock trading. What is the stock market? The stock market is a platform where investors can buy and sell shares of publicly traded companies. It plays a vital role in facilitating trade by providing a marketplace for these transactions, allowing businesses to raise capital and investors to gain ownership in companies. When you purchase a stock, you're essentially buying a small piece of that company, which can lead to potential profits through dividends and capital appreciation. The stock market significantly impacts the economy by influencing business growth and consumer confidence. Key terms to understand include stocks, which represent ownership in a company, shares, which are units of stock, and exchanges, where these transactions occur, such as the New York Stock Exchange or NASDAQ. By grasping these concepts, you'll better appreciate how the stock market functions and its importance in driving economic activity. Types of stocks. When it comes to investing, understanding the different types of stocks is essential. The two primary categories are common stocks and preferred stocks. Common stocks give shareholders voting rights and the potential for capital appreciation, while preferred stocks typically offer fixed dividends and have priority over common stocks in the event of liquidation, but usually lack voting rights. Next, we have growth stocks and value stocks. Growth stocks are shares in companies expected to grow at an above-average rate, often reinvesting profits rather than paying dividends. In contrast, value stocks are considered undervalued and may offer dividends, appealing to investors looking for stability and income. Speaking of dividends, these are payments made to shareholders from a company's profits, providing a steady income stream and reflecting a company's financial health. Understanding these types of stocks can help you make informed investment decisions. How to invest in stocks. Getting started with stock investing can be straightforward if you follow a few key steps. First, choose a brokerage account that fits your needs. Look for platforms that offer user-friendly interfaces, low fees, and educational resources. Once your account is set up, it's crucial to conduct thorough research and analysis before making any investments. Familiarize yourself with the companies you're interested in, their financial health, and market trends. This knowledge will empower you to make informed decisions. Additionally, emphasize the importance of building a diversified portfolio. By spreading your investments across various sectors and asset types, you can reduce risk and increase your chances of long-term success. Remember, investing in stocks is not just about picking winners. It's about creating a balanced approach that aligns with your financial goals and risk tolerance. Happy investing. Understanding stock market indices. Stock market indices are benchmarks that track the performance of a specific group of stocks, providing insights into the overall market trends. Two of the most well-known indices are the S&P 500 and the Dow Jones Industrial Average. The S&P 500 includes 500 of the largest US companies, offering a broad view of the market, while the Dow Jones tracks 30 significant industrial companies, reflecting the performance of established businesses. These indices serve as indicators of market performance, helping investors gauge economic health and make informed decisions. Additionally, many investors use index funds and exchange-traded funds, ETFs, to invest in these indices. These funds allow you to buy a collection of stocks that mirror the index, providing diversification and often lower fees compared to actively managed funds. Understanding indices is essential for navigating the stock market effectively. Risks and rewards of stock investing. Investing in stocks comes with its share of risks and rewards that every investor should understand. Common risks include market volatility, where stock prices can fluctuate dramatically due to economic conditions, political events, or changes in investor sentiment. Economic downturns can also negatively impact stock values, leading to potential losses. However, the rewards of stock investing can be significant. Investors have the opportunity to earn capital gains when stock prices rise, as well as receive dividends, which are regular payments made by companies to their shareholders. These rewards can contribute to long-term wealth accumulation. It's essential for investors to assess their risk tolerance before diving into the stock market. Understanding how much risk you're willing to take can help you make informed investment choices that align with your financial goals and comfort level. Balancing risks and rewards is key to successful investing. Basic stock market strategies. When it comes to successful stock investing, having a solid strategy is essential. One fundamental approach is the buy and hold strategy, where investors purchase stocks and hold onto them for an extended period, regardless of market fluctuations. This strategy benefits from the potential for long-term capital appreciation and reduces the stress of trying to time the market. Another effective technique is dollar cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of stock prices. This method helps mitigate the impact of market volatility and lowers the average cost per share over time. Additionally, value investing focuses on identifying undervalued stocks that have strong fundamentals but are trading below their intrinsic value. By employing these strategies, investors can build a robust portfolio while managing risks and maximizing potential returns in the stock market. Resources for learning more. To deepen your understanding of the stock market, there are numerous resources available for beginners. Start with some highly recommended books, such as The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton Malkiel, which provide valuable insights into investing principles. Websites like Investopedia and Yahoo Finance offer a wealth of articles and tutorials to help you grasp key concepts. Online courses from platforms like Coursera and Udemy can also provide structured learning experiences. Additionally, staying updated with financial news and market trends is crucial. Consider following reputable sources like Bloomberg or CNBC. Joining investment clubs or online forums can provide community support, allowing you to share experiences and learn from others. Engaging with these resources will empower you to make informed investment decisions and enhance your stock market knowledge. Conclusion? In conclusion, understanding the stock market is crucial for anyone looking to build wealth and secure their financial future. We've discussed the basics of stock investing, including the different types of stocks, the significance of stock market indices, and essential strategies like buy and hold and dollar cost averaging. Remember, successful investing requires thorough research, a diversified portfolio, and an awareness of the risks and rewards involved. As you embark on your investment journey, keep these key takeaways in mind to guide your decisions. If you found this video helpful, we encourage you to subscribe to our channel, like this video, and share it with friends who might also benefit from learning about the stock market. Your engagement helps us create more valuable content, so thank you for being part of our community. Happy investing! Remember to subscribe and turn on notifications so you don't miss more videos from additional source income, money strategies, and much more. Check out my playlist and I'll see you in the next video. Take care.